Welcome everyone to the Kindle Report. It is Tuesday night. This is broadcast for Wednesday. Before I get started, make sure you hit the like button and subscribe. So, interesting day today. The title of this video is Banker Crisis, ? Is there really a bank crisis going on? I think there was a run on a bank on Friday. I'm not buying into it. As I told you last night, there's no contagion. I see talks of Credit Suisse and all this stuff. Probably not going to happen. And I think this thing, there's still going to be noise around this. And I'll discuss a little bit tonight on what I think is what we're going to see. We saw a couple indexes, KRE, which is the commercial regional bank index, and then we saw the QABA, this one I'm watching, which is the community bank, got a big reversal. It was up big and then faded, but there were some great trades with some of these bank stocks. If you bought them yesterday, selling into this early morning rise, and we obviously saw the S&P really move up. We were up over 2%. Not only did we go to R2, we printed just short of R3 yesterday. So it was a pretty impressive rally, and there was some pretty good selling going on. Unfortunately, I was really crazy busy all day today. Couldn't even get to Twitter. I couldn't get off of what I was doing, just client meetings and things going on that were pretty insane. A lot of folks have a lot of questions, and we have customers that literally have billions of dollars of other people's money at risk. So it's been an interesting few days, but I don't think, I said this last night, I do not believe that this is not 2008. We don't have all these assets coming around. I think the funniest story that I saw today, though, I think it was interesting, on Signature Bank, on one of the S banks, is that Barney Frank, as in Dodd-Frank bill, is on the board of directors of Signature. And it was really interesting. I think we're starting to see some actual journalism in this country. And we're seeing Bloomberg, and we're seeing a bunch of media outlets actually bring this up. And it was funny because somehow they blame Trump, and I think Elizabeth Warren was blaming it's all Trump's fault. But meanwhile, Barney Frank has been lobbying to do exactly what Trump did since he's been on the board of this bank. Pretty funny. Also, our buddy Newsom out in California, who was lobbying for a bailout of SBV, was interesting enough, had money at SBV. So finally, the media is starting to call out some of this hypocrisy that we see all the time. And I'm super thrilled. I'm just going to tell you, I'm super thrilled because this is the point of journalism. So I know this show's not about journalism, but it is about paying attention to what's going on and what is important, especially around this banking. I'm going to call it a situation. A lot of people are liking to use the term crisis. I was on a Spaces on Twitter Space on Sunday, and I was quoted. I'm going to call out again my good friend Dr. Jim Baker and I were talking on Sunday, and we figured out that all they really had to do was open up the discount window and everything was fine. Nobody would even know that symbol SBF or SBIV. No one would even know that if it wasn't, if they would have done what they should have done. I still think there's some stuff that smells pretty bad around SBV and everything that went on there. But at least, like I said, it seems like there's some real journalism going on. So maybe some things will get revealed here that we all need to know. In the end, I still think this was somewhat of a few banks that have issues. I'm going to stick with this dialogue that I started a couple nights ago, actually on Sunday night's broadcast and last night. And tonight, I'm just going to continue with this. I don't think there's any major banks at risk here. I don't see the risk. And when I said it's not 2008, 2008, we had all kinds of toxic assets on the books. And it was interesting. There's probably a bunch of crud on we'll just say on the SBV situation. But one of the things, there's a couple things. There's too big to fail, and I was talking to somebody today, and they came up with a term I had not thought about before, but too big to liquidate. So if you have all these big assets on the book, especially like an SBV, who's going to buy all these assets? So it's interesting to see what's going on. There's going to be an ongoing story. Sure, there's going to be some hiccups. There's still going to be volatility in the bank stocks. All of that stuff is going to happen. But I think for the most part, it'll start to work itself out. In a couple of weeks from now, we won't even know it happened. Markets, like I said, equity markets were doing quite well. Even a lot of these bank stocks did well. There were some great, like I said, great buys yesterday. Sell the open this morning. Quick little scalps that were pretty substantial. We also saw yields come back in a bit, meaning that the yields were all of the bonds were selling off a little bit with yields a little higher. So everything's going to normalize, in my opinion, here in just a couple of days. Let's talk a little bit about CPI. Came out pretty much in line with what everybody's looking at, 0.4 year over year at 6%. Pretty much all the numbers that I saw, numbers that I talked about last night, were exactly in line with this. This was where we were expecting to come in. Tomorrow we'll get PPI. On Wednesday we'll get PPI. That's expected to come in at 0.3 and also 6% year over year. And I don't see any surprises. In fact, maybe that year over year number comes out as a positive. Maybe it's not as strong as, not at 6%, but something a little weaker. I think that could wake up some folks as well. It appears, as you see when I go through the technicals here in a few minutes, that we probably played out a lot of this rally for the most part. There might be one more little blip. I'll cover that in the technicals here in a few minutes. But this is, for me, this is really played out pretty good. And I just don't see the extra issues and why people are going to be really upset. And as I said last night, this was not a bailout. There were definitely some mistakes made. I'm not going to go through. I did go through them last night that I think are important to look at, but I just don't see any ongoing saga around. Maybe there's a story or two, like I said, that will create some volatility, but we'll just have to watch it. It'll definitely be on. It's still kind of on page 1, page 2, as far as the news goes. So we'll have to keep an eye on these guys for a few more days. But like I said, I think it'll start to fade very, very quickly into the rearview mirror. Let me look at a couple other notes I have here. Yeah, I really don't see anything else. The S&P finished up 165, NASDAQ up 2.14, and Russell up 1.87. And so let's just let's go to the database. Should be able to get through tonight's stream fairly efficiently. I don't expect any big rants to come out of me as we go through it tonight. So let's go through all the basics and see where we end up here. All right, so here is our short-term database. The Wavetech database is coming in at 14.21. There was 384 buy signals, 205 sells. So we're seeing a little bit of traction, still basically a rotation down here. We may have seen the worst of this liquidation. It will take a few more days. I think probably this coming into Wednesday midweek, we're probably going to see this start to stabilize as we come in toward the end of the week. I don't expect, if we stay up in this 39 handle or higher on the S&P, I don't expect to see the intermediate database change by much. I think if anything, it might see a slight liquidation, but for the most part, it looks like we're going to stay in a fairly decent position on the database as we go forward. So let's, there's really not much more on the database, so let's get into the technicals and check out what the setup looks like. So we'll start with the hourly chart as we always do. This is the E-mini hourly. I think it's kind of interesting because we still have some upward targets here, and this is what I was alluding to, that we are likely to get some kind of upward bias a little bit. This is 200, an hourly chart, so the 200-hour moving average is coming in right now at, let me bring up this number, 200 is at 39.80. Yesterday we printed, I think, 72 high, I think was the magic number on the upside, 72.50. I think we could see slightly higher high. There's some fib targets up at 92, and all of a sudden we're seeing numbers start to pop out here at the 40 handle, which 4,024, and then even a higher number than that, up around the 4,040 level. And as you folks know, I've talked about this 40 handle. We've gotten there's a couple of numbers to watch for. 40.0306. We've been rejected multiple times off of that level. And it's interesting because as I look at the, you'll see in a minute when we go through the daily models, they're really, there's not a lot of there's not a lot of upward momentum here. It still looks like we're stuck in this range we've been in, and we expanded it to the downside. I feel sorry for all those folks that got short down there in the 38 handle thinking we're going, the end of the world was coming. So they caught a lot of people short, as I talked about. We currently don't have any positions from the standpoint of any long positions on these equities. So we're still in this chopping range. And we saw something here, and let me go back full screen on this chart and we'll go through the rest of it. But we saw where we're getting these volatility bubbles, I call them, and we've seen quite a few because we've had so much news coming out of late. So it's interesting when they contract and get in this range. It looks to me that just based on the algos that we should see some strength, and as usual, coming into about an hour before London. If you've been watching these numbers, if you're up and around watching how we trade into London, it's been pretty accurate. Let's go ahead and take a look at the daily so we can get a feel for this. The daily, like I said, was pretty impressive yesterday. We printed up to, let me get the exact number here. We printed up to 72.50. That was, and R3 yesterday was 75.27 on this thing. And so we got right up to there. We got rejected. I did have a tweet loaded when we were there to watch out for rejection around R3, but got distracted on a call I was on. So unfortunately didn't get that. But this is somewhat interesting because the algos are a bit of a mixed picture here. They're projecting that we could see a little bit of a backfilling for Wednesday. But it's interesting because PPM2 and PPM3 are suggesting stability. So I think we continue to hang around this 200 period moving average, plus or minus a little bit. I'll go through the market grid numbers for today, and we'll set that up. And I'll show you here in just a second. But it does look like there's going to be overhead resistance. There's a ton of resistance up here at the 4,004.50. So if we print it up there, I just mentioned that 0306, probably going to get another rejection if we get above 4,000. So for you traders that are up there, look for a rejection. If you do get a long trade, look for a reversal up around that level. It doesn't look like we're going to be able to get through that level. Once again, if I went through all these patterns over here, you'll see that we had a bunch of rejections around 40.24 was a day. Then we saw, just right at 40.03 over on the 28th. And then these numbers just kept coming up. And it looks like we're still in this sideways pattern here. So as far as any kind of major move to the upside and breakout and all that, that's not yet. That's not the case. I still think we've got work to do. And just going along with the main narrative on it in in the news lines right now is still going to be this banking situation that we're going through. There's going to be noise around that. So this could be enough to keep things somewhat in check. Maybe PPI there's no surprises there, and we just get another range, continuation of this range. I don't see anything from there. So to keep this tonight's stream a little shorter, I don't see any reason to go through the weekly charts. So we're going to go through dailies on NASDAQ, Russell, and then we'll get right into interest rates. I think they're a little bit more interesting when we get there. So let's go ahead and take a look at the NASDAQ. So looking at the NASDAQ, there were some numbers that I mentioned last night. It seemed kind of crazy even to mention them. The high was 12,343. It mentioned some of these numbers up in these 12,000 handle. And boy, we just got a big reversal. And as I talked about, the configuration here on the NASDAQ is a bit different, but it's also projecting that today is probably going to be a high. So what's interesting about this pattern is we didn't get an expansion to the upside on the market grid. Same thing happened, and I forgot to show you the market grid on the S&P. So let's do that. I hate to commingle this after I put the page up, but let's just do this real quick. This is this is market grid. I'll do market grid here. So we're looking at S1. S1R1 is in the configuration, which was 3929, 4,000. Let me get the right numbers here. 4,007, right in that 0306 number. So we could see a print up there, and if there's some possibilities here of a little more volatility, just because volatility's kicked up in the last several days. So there's still that there. 39.89 is the 10 period moving average, and then 40.29 is the 21. And like I said, R2, R3 would be an absolute extreme. I don't think we penetrate through these numbers, but we could get some additional volatility on the upside, which would print us up to R2, which would be 40.07, 39.79, which is just a touch above yesterday's high at 72. Let's go ahead and do the NASDAQ here while we're here, and I'll cover the NASDAQ there. And what we're looking at here is S1 12,254, S2 would be the extreme 12,513, and R1 is 12,420. So look at R1 as a pivot, and the same with S1. If we print down, they'll just look for an S2 R1 number. So let's go back to the NASDAQ and back into the algos are actually suggesting that we're going to see just more choppy range, just like we're seeing in the patterns that we saw in the S&P 500. So don't expect much different here. I think this market grid number that we're looking at, you can see the ranges here. I'll expand this chart just a bit. That we're likely to stay right in these ranges. And when we get this, what I call a box formation, this is when the market grid squares off. This is typically a setup for a consolidation and more sideways chop. So the numbers to look at just from a pure moving average, 12,179. If we print through that, then we could expand into that S2 number I was just looking at just a second ago. So just know those are the places where you're going to want to focus in if you're trading intraday. As far as the trends go, there are no real trends on the upside or the downside in a moment. We're completely in a sideways range, and I've went through this scenario quite a few times in the past where you can go all the way back into February, and we've just been chopping around for weeks here, and there's really nothing to point to at all that is interesting or suggesting anything different. So this is interesting on the Russell. As we go through the Russell, it looks like the Russell is finally going to try to bottom, but we've got a couple things that are about to happen. Not going to happen today, but it will happen most likely on Thursday. We're going to get a crossover of the 10-period moving average and the 200. That's actually, I know a lot of people think when the short term crosses the longer term, that's negative. I look at that as a positive and probably starting to set up a more significant bottoming pattern. And what we're going to want to watch for the next couple of days here on the daily Russell chart is to watch the market grid come in. So as long as we could do an inside day today, but most likely what we're going to see is maybe an R2 here, which is going to put us at 1784. Right now we're trading. I'm sorry, let me get this right here. 1794. I was on the wrong number here. Let's get over there. R2 17. 1784, 1804 is the numbers to watch. We also have, like I said, that downward slope 10-period moving average. So look for volatility. We should stay above Monday's low and probably spend an inside session here from that standpoint. Okay, so let's go ahead and let's get into the interest rates. So the 10-year came in a little bit. There is some resistance because of the pattern that's setting up here. This is the daily 10-year. Looks like we're going to consolidate. We should stay above. I'll give you some parameters. I think we stay above here, just getting where the 40 comes in at 370. We're printing at 363. I think we get back above this 365 level. I talked about this being a key pivot. So if we get above 365, we'll start to move up. I don't think there's a lot more, maybe 375, 376. We should start to consolidate. What will happen tomorrow, and I'll bring up the futures so we can see this. Let's go ahead and do that. Let's bring up the 10-year futures, and we're getting that box formation here on the futures, which means consolidation. Like I said, we should stay under the 200. So if you're trading the futures, you should be looking at the key levels here around this 200-period moving average is right at 114.17. We spiked above that, we came back under. We should stabilize up here, but ultimately start to move back toward the 10, 20, the 10 and 40 period moving averages. That's going to put us just rough numbers, 113 with a possibility around 112, 12, 112, 16 level should be pretty good range to look at. The algos are suggesting exactly that this uptrend is going to stall, which means that we should start to see rates flatten out, start to move slightly higher. But this was a key point in the charts. And after tomorrow, after Wednesday's action, what I'll do is I will go into a little longer view of what's going on with the 10-year. There's still, like I said, there's still going to be noise around the banking system and on these things that are going on. So just expect to see some consolidation for at least another couple of days. Tomorrow's Wednesday, probably into Thursday, and we get the claims and get some other numbers. We get PPI and get all the inflation data behind us. I think once that happens, everybody's going to be looking in the rearview mirror, and what they're going to see is PPI, CPI are probably fairly stable, no surprises there, and all of a sudden the issues with looking back at last Friday, looking at Monday's action, that there was no, the so-called banking crisis disappeared pretty quickly, and things are going to stabilize. And just a comment here while we're just talking interest rates and Fed. What the Fed did was exactly what they needed to do to stabilize things. They just a quick mention, and I'll go through this in more detail. We're looking at, come in to a week from now. Next Wednesday will be the Fed meeting, and they're probably going to do 25 basis points. They were always going to do 25 basis points, my opinion. And we're going to continue to see Fed funds move up towards 5.25, 5.5 is my terminal rate. They're not going to stop doing what they're doing. I just, I know folks are going, oh, this put everything on hold. No, it did nothing. This was not, while there were dislocations that happened because of the book of business that happened, I would just tell you that for the most part, this was a run on a bank, and it was instigated. Peter Thiel and his group and those bandits that came in. There were some other big transfers that came in also on Thursday. So that was what triggered the bank. There were issues there, don't get me wrong, but they weren't going to be systemic. And if a couple other things would have been handled properly, that would have been much, much different. So anyway, just like I said, this noise is going to continue around this situation. And, I don't think Signature Bank is going on, but somebody I was talking to today made a comment about something. I'll share that with you because I thought it was pretty interesting. Is if you want to see a bank that's in trouble, look at a bank that's growing really fast. And the reason why they're growing really fast is because they're probably doing some risky business. Okay, they're looking at they found a little niche and they're able to exploit it, and they build the bank up and do everything that basically SBEV did and Signature Bank did. Signature Bank is a kind of an interesting story. Won't go into that tonight, but there's definitely some similarities in growth and things like that. And we could go through and do a whole history class right here on the banking system. And I'll make an announcement tomorrow night of something that I'm doing on Twitter. Then make sure you folks all know about ahead of time. It will be hopefully happening sometime on Thursday and during Thursday's market day. So anyway, but just know that we're going to see the interest rates start to consolidate here. We should see some minor upside. 375 is probably going to cap out maybe 378 on this stuff. Those bring us back into these moving averages on the 10-year futures, and the yields should set up there. And like I said, tomorrow night after we get Wednesday's activity, I'll go through maybe some yield curve concepts and things that are going on there just to kind of confirm this. So let's go ahead and go into crude oil here. All right, so crude took a little more downside here than I thought we might get. We are trading down here into fib target 2, and that's put us down into the 71.30 area. Basically, we're down at the bottom end of this trading range that I mapped out for you the other night. And this whole pattern that's here is just a continuation. I won't spend your time, my time to go over this, but we're still in this. We're at the bottom end of this range. This area down here around $70, 71, right where we're trading right now, is fairly significant, but it's also at the bottom end of that range. The algos, I mentioned this a couple of nights ago, that the algos are suggesting that probably if Wednesday, maybe Thursday, we should start to see a rebound back into this market grid area, and that's probably going to tell us most likely we'll probably see us bounce back in. R1 here is 75.60, and right now we're trading almost RXT 71.42 last trade. We're trading 72.05, so we printed down right into that level. So the low of the session overnight is actually the extreme of the based on volatility. And it's interesting because everything that is the pricing that's coming in from the market grid is, even though we traded down, we didn't see a lot of times what happened. The market grid will continue, maybe set up some kind of channel to the downside. That's not happening here. What's happening is all of this happened on the S&P. I could probably go through all of these bank indexes, everything. We get this box formation on the market grid. You have to understand, I've been watching I created market grid back in 1991 when I was on the Pacific Options Exchange. When I created this thing, and I can tell you this is that I've watched it for decades now, right? That's 3 decades, 30 years. And when we get this box formation, it just suggests we're likely to go into this sideways type pattern. Now that we look at the algos, we have some other tools that have evolved over the last several decades. It looks like what we're getting is, that rebound that should come in here on crude oil. And like I said, we'll watch these prices pretty close. I'll go into maybe a weekly pattern, some other things over the next couple of days, depending on what comes out of here. So going into gold too far, too fast. We actually got an RXT sell signal 2 days ago. Right here, I'll put a cursor on it. The close was at 1916, and if we look at the market grid that day, 1895 was RXT. So we got RXT sell that typically will signal a 1 to 2 day sideways pattern. So we've had 2 days sideways. We're working on the second day, and we also have this big box formation on gold. So it's interesting. Everything is lined up perfect. We don't usually get it so symmetrical, but everything's lined up that way. So we're really looking at the bottom end of the market grid right now is 1879, the top end 1953, and we printed the other day. The low we printed, or the high we printed, was 1909. So actually, it was not. Let me get that exact number. That number was 1919 was the high. We should start to move back into these moving averages. I talked about this last night, 1880, 1890, 1880. This 10-period moving average over the next couple of days will come into the pattern. We'll probably get a crossover of the 10 over the 40. And in this particular pattern, then this becomes somewhat of a negative cross, but it just tells us that we're going to stay in that box formation. So we should see consolidation. If you bought it really good down here, down in the pattern when we were down into this bubble, down at 1800, 1815, whatever, if you're able to get positions on, you're in pretty good shape. We should still get a right shoulder and a possibility of more moves. Looking at the algos, it just says that moving averages are going to come up underneath and support this market. Somewhere around that 1880 should be the range where we end up. So Bitcoin, very interesting action in Bitcoin. We traded all the way up to the 200. I mentioned that I was somewhat hesitant to bring this up, that we could print up into 25,000. Well, we did more. We did 26,533 on this exchange. This is BitSnap, I believe, yes. So we did print up there. It looks to me that we should come back into the range. I think that was probably the peak of this value. A lot of folks are claiming, trying to, you have to understand something real quick, is when we get movements like in the market and you get all this noise meaning news, this banking information and everything is coming out and you get so many people worked up, it's possible people were running into Bitcoin as some kind of hedge. Certainly a possibility. No one knows why everybody's buying, why it happens. You can try to articulate that this market movement did this because of X. That's fine, and sometimes you can actually figure that out, and sometimes it's fairly obvious, and maybe this is one of those cases. My expectation then would be that a lot of this air needs to come out of the market. This market probably come back into the 22, let's just call it 23 level, 23.5, 23. So we have established an uptrend. PPM1, this is a daily chart we're looking at. PPM1 is at 0.3.51. This is a very robust uptrend. So that value at that moving average, 22,945, and it is going up. Let me get a number for you. It's going up at about $700 per day. So that number, as we come in overnight, we should see this number move up to around that 23.5, 23.6 is going to be the range. And with what the algos look like, it looks like this upward trend is going to have enough leg. So we did print up the 200. Let me get this value here so you can see it. The 200 is 27,069. We could still see that number. I think it's going to be interesting as we complete today's values. It looks like the algos are suggesting a slight downtick in momentum to the upside, but that still means that 20, let me make sure I get the right numbers here, that 23.5, 23 even number is going to be pretty substantial support at those levels for at least the next couple of days. Like I said, once we get through midweek, and I will cover some of these markets from a bit different angle. Right now, we're just sticking with the dailies, staying real short term as we come into Wednesday. Midweek, I think we can maybe start to make some assumptions about what might happen as we come into the end of the week. But for right now, we'll just flow with where the order flow and where the money's going, and just stick with that analysis. So that will do it for tonight. Just looking at a couple of comments here. Just looking to see what you folks are saying. Yeah, I did not see NFL. I did not see this announcement that you're talking about. So I can't really comment on it. Wish I had. Like I said, I wear multiple hats around here, and one of the things that spent some time talking to our institutional clients over the last couple of days. They've been dominant in a lot of my time, and appropriately so, just to have a handle on what's going on. And I've shared a lot of this stuff in some of these conversations that are being presented here on the channel to try to give you folks a good understanding of what's going on as far as the conversation. And like I've told you folks many times, this channel is really about folks that are using our process, whether it's Wavetech, PortfolioXpert, indicators, all that stuff, trying to tie that together. We're very close to launching something new that I will be excited to show you folks. So like everything, it seems like you have to be careful and trying to put delivery dates. I keep learning this lesson over and over, so that when it's ready, I will tell you what the deal is. And I think it's going to help a lot of folks and I'm excited about the things that we're working around on the background. So anyway, as always, thank you so much for watching, and we will be here, and I will be here. All of us will be here tomorrow night, same time, same station. We come into the Fed next week. We'll probably do a Fed party during Wednesday and try to get everything up to speed there. So have a great day trading tomorrow. Be safe out there. Probably still plenty of volatility. We'll talk to you tomorrow night. Thank you again.